Hi there and welcome to the Stockscores Market Minutes for April 16th, 2012. This week's topic, Spain, is it the next Greece? We'll look at some different charts and try to answer that question. Before we get started, a reminder of the Stockscores Canadian Active Trader Expo, which will be held in Calgary, Vancouver, Toronto, and Montreal. The dates are there on your screen. For more information and to register, go to stockscores.com/expo. All right, in order to answer the question, is Spain the next Greece? We need to consider which ETFs tell us the story of what is happening in Spain. And I've listed three here that I think are important. First is the VXX, which of course is based upon the VIX index, often called the fear index. And if there was a significant risk of default in Spain, we would expect to see the VIX jump higher. Second chart is FXE, which is the Euro ETF, the ETF based on the European currency. And problems in Europe would show up in the euro with a decline in value. And the final one is EWP, which is an ETF based solely on Spain. And of course, if there's big problems there, we will see that ETF go down. All right, so what have we got? Well, the VIX broke its downward trend line last week, actually late the week prior. And it is starting to show some signs that there is an increase in fear. Certainly, we've seen more volatility in volatility. And that implies that there is an increased risk, but there is not yet really a strong show of fear like we had last year at this time when Spain was going through its problems. So we could be in the early stages of an issue in Spain, but so far the market isn't really convinced that it's going to be a big problem. This is confirmed when we go look at the chart of the euro, which has shown a downward bias over the last couple of months, but really it's only in a pessimistic pattern with strong support where we are at right now. And in fact, today, the euro bounced off of that level. So that tells me that, yeah, there's some pessimism about Europe, but there isn't really that strong run for the exits kind of fear that we saw again with Greece last year. And finally, this is a weekly chart going back 5 years on Spain. The EWP is the symbol. And it's been a pretty ugly run for Spain since early in 2011, but if you know anything about Spain, of course, you'll know that this economy is in a recession. They have very high unemployment, I think something like 23%. So the chart, I think, tells that story. It doesn't necessarily tell the story of a country that's set to default on its debt. If we broke through the lows of 2009, well, that would be a little bit more critical and imply that there is something bigger happening. So in answer then, the charts are telling us basically that the Spanish economy is bad, but there is not yet a significant chance of default that will affect Europe and the rest of the world. I would caution, however, that this can change at any time, and I think that these charts should be watched very closely over the next while because any sort of risk of default in Spain would affect the whole world and to a much greater degree than Greece affected us in 2011. So keep an eye on those charts. All right, let's get into the analysis. The first chart here is the S&P 500. This is a weekly chart going back 2 years. And you can see that last week we broke that upward trend line. We had been sort of bumping up against some resistance. The buyers were hesitant and some weak numbers on the economy side kind of hurt this market early last week. The only thing that's kind of a saving grace here is that the market is breaking down from a new high. You know, 3 weeks ago we hit a new high. There's not yet been a formation of a falling top. And so the pattern that's setting up right now is more one that implies a short-term pullback or maybe a period of sideways trading, but it doesn't really imply a correction. Now, if you go back on this chart to, July, August of last year, you can see that the market made a high at the beginning of May and it tried to make a new high in July, but at that point there was a falling top, and that led to that pretty substantial sell-off that we saw late in the summer last year. So again, we could be setting up for a correction, but I don't think one is imminent. On to the 20-year bond chart. This is the TLT ETF, and as some flight to safety has occurred with some weakness in stocks, we've seen this rally up, but I can't say that this is an optimistic or strong looking chart. I think it's a chart that had a little bit of bounce back from some selling pressure 5-6 weeks ago, but I'm not yet seeing a sign that the market's really scared that the world is falling apart. Of course, we've already discussed the VIX. The downward trend line has been broken. But now for this to really be an important chart implying that there are big problems in the world, we would need to see a significant break to the upside from the rising bottom. Now that could happen tomorrow. I mean, today as it is, there's nothing to worry about here yet, but it is forming that rising bottom. And if we had the VIX, the VXX jump up through $21, I would say, then that would be something worth getting concerned about. TSX is in a little bit of a bearish pattern. We broke that upward trend line that had been building since late last year. Couldn't get through resistance. We've now gone back into a negative cycle. I'm not crazy about the Canadian market right here. I don't see a real strong sign that we should run for the hills. I just don't think it's showing us any sign that there's some good opportunity. And certainly when I go looking for opportunities in Canada, I don't see a whole lot. US dollar is really an important chart right now because it is going into a narrow trading range, and that implies that we are on the edge of a big move in one direction or another. If we break to the upside from this pennant, that implies that other parts of the world may be having problems. Could be Europe through Spain. It could also be that the U.S. economy is getting better, so we'll have to look at the reason for an upside breakout. A downside breakout would imply that maybe the U.S. economy isn't doing as well, that the U.S. Federal Reserve is going to have to stimulate the economy with some printing of money, and that would be good for commodity stocks. And so you want to watch this chart very closely because we are getting to the point where a break in one direction or another is imminent. It's perhaps fitting then that we see the gold chart right at its upward trend line where it should bounce, but if it breaks this upward trend line, then the gold upward trend that has been underway for a number of years will be over. And the critical point there is what happens with that US dollar chart. So these things are very interrelated. You want to watch this chart real closely. I'm looking at it on a weekly basis going back 2 years. If that upward trend line gets broken in a strong way with a weekly close below that line, I think we should be concerned that the party in gold is over, although that probably implies that the US economy is getting better, that there aren't big concerns over in Europe. Essentially, it tells us get out of gold and move back into stocks, and so watch that chart very closely. Final chart this week is the chart of Brent crude, which has bumped up against resistance, has fallen back as we would expect. This probably more than anything tells us that the political concerns in Iran are sort of dissipating. We'd like to see this chart hold up fairly well here because it's also an indication of global economic strength. But I think more than anything, we're just seeing the political fear factor come out of the price of oil. So my outlook then is I'm neutral on US stocks and gold, pessimistic on Canadian stocks, and bearish on oil. The market really has some increased risk factors for a correction, particularly with Spain, but there's really not yet a strong signal. It's just one of those situations where you want to take a couple steps closer to the exit door because caution is warranted. If you're going to trade stocks, be selective. Trade those individual abnormal stock names that are moving on their own story and have less of a correlation to the overall market with a fairly short-term outlook. Well, once again, reminder of the Stockscores Canadian Active Trader Expo. You can register at stockscores.com/expo. Have a great week in the market and trade well.